Hi friends, this is Deepak from algos, and today I am doing this video after quite some time. And the reason for doing the video is uh, because the month January has been one of the worst month in terms of intraday algo trading. So let us discuss few things and see how we can take this forward. So what I am going to discuss, these are the few points. First, we will see how Jan month has performed. This has been obviously the highest DD phase for most of the people, including algo waste. What we can do other than simply tweaking the strategies, because tweaking the strategy is not the solution at all. We cannot keep changing or change the strategy based on certain drawdown phase. So we will discuss that. Another important point is many of us would have observed that there is a vast difference in PNL on the same strategy for different deployments. Why that happens? Okay, and then I have observed some issues in the strategies, especially with the strategies which runs on different indices on different days on expiry. Why? What is the issue? And I will show you some example also on that. What is the way forward, especially on expiry strategies? Now another event which is coming is budget. We will see how we trade from tomorrow till the budget day. I am planning to do one strategy in positional also in the marketplace, and I will not be adding any new strategies. One of the existing strategy which has not been performing, let us say 1W AW102, will convert it to positional weekly strategy. Another issue which has come up in last 1 week or so, that the brokers which were providing 100% usage of pledged margin for intraday trading and as well as overnight as well, that requirement has changed. I am referring to the broker IFL, and I think that has happened with other broker also, including Zerodha and all. So what is on that? And there is a shared code changes because of this 50-50 margin requirement. So we will discuss that. So let us start with the January month performance review. So I am opening with the NSC first. So NSC on 26 lakhs deployment, we have a PNL of 39,000, which makes it to 1.53% loss on gross basis. So if we add the expenses and all, it will be around 2%. And you can see that the strategies, most of them except AW113, which is a Fin Nifty strategy, which has done well this month as well as last month also, around 5% up. AW111, which is one of the oldest strategy of algoways, also has not done bad. It is still in green, at least on gross basis, though very marginally. AW105 has been in green. Others all have struggled. AW101 has done little better this month. It has not been doing well in last few months. Other than these, all the strategies have been in loss. And most unfortunate and disappointing thing is the strategy AW118 and AW106, which trades on indices which has expiry on that particular day. I will discuss on these two strategy in detail. The reason for AW106 standing at 12,000 loss is the overnight loss which it suffered on 17th of January when the market opened around 1,500 up to 2,000 rupee gap down in Bank Nifty, and that particular day was Bank Nifty expiry as well. Market opened drastically down and it immediately recovered as well. So what happened in this? in most of the deployments, when the market went down, the PE got exited in huge doses, okay, and the strategy went into error. Most of the cases, CE was open, which was in good profit when PE exited, but immediately market recovered 1000 point on upside, and those CE also went into huge doses. Otherwise, suffering such a loss of 16,000 on 1x on a strategy on which we target around 800,000 rupees, even 500 rupees overnight gains, and losing 16,000, then it makes the strategy not worth enough to do and target those small amounts for 20 days in a month, and on 21st day we lose around 17,000. So this does not make any sense to run such strategies. So we only will be running this strategy only in intraday now. Positional, as I mentioned, will have a separate strategy. Out of these 12 strategies, one of the strategy, most likely 102, will be positional going forward. AW118 as well is the strategy which trades on expiry days only. Obviously, the logic is entirely different between 106 and 118. Now, 118, there has been an issue. Let me go to an Excel sheet. Since different indices are trading on different day, Monday से लेके फ्राइडे तक सभी डिफरेंट इंडाइसेस ट्रेड कर रही हैं, राइट. दिस इज मिड कैप निफ्टी, फिन निफ्टी, बैंक निफ्टी, निफ्टी and Sensex. Now, few of the brokers, they don't allow the market order in mid cap Nifty, so only limit orders is allowed. This is market order is allowed. Some brokers even don't allow in fin Nifty also. Market orders are allowed. Nifty also market orders are allowed. Sensex again limit orders are allowed. In addition to that, there is another variation that most of the brokers or some of the major brokers, they allow MIS and NRML order type in three major indices. Now, they don't allow, some of the brokers allow only MIS here, and some of the brokers allow only NRML here. So, there is a lot of different arrangement of all the brokers to trade these indices. Now, the major problem comes here in the order type, which has made the strategy 118 and 106 to suffer. I will share how it is. Since the two indices don't allow the market order, so we have to do a certain changes in the setting of advanced setting of the strategy. I will just share how it is. If I go by 118, if you see the advanced setting here, since we have various options here, market price, if it is market price, then there is no issue. If the brokers are allowing it and market price, so the trade will get executed immediately on whatever available price when the signal generates. But when we go for limit order, we have to LTP order. LTP orders are treated as a limit order in TradeTron setting. So what does it mean? That if signal generates at 100 rupees, it will send an order, LTP order at whatever the LTP, when the signal generates, it will send an order at 100 rupees. But since the market is on move, it if it does not execute, suppose the order has gone, the value has gone to 98 rupees, but we want to sell at 100 rupees. So in that case, we will put here to make the attempts, number of attempts, 2, and I had this ticks at 10. अब 10 टिक्स मतलब हो गया आपका एक टिक एनएससी में सभी इंडाइसेस में 0.5 का 0.05 होता है. सो 10 टिक्स मतलब 10 इंटू 5.05, तो 50 पैसे, यानी कि हमने अगर हमारा ऑर्डर गया है 100 रुपीज़ पे सेल करने के लिए और वो रेट नहीं अवेलेबल है अभी, तो व्हाट इट विल डू, इट विल मेक अ ट्राई एट 100 माइनस ये जो 0.5 जितना हमने टिक्स दिया है 99.5 पे ये सेल का ट्राई करेगा. अगर यहाँ भी अवेलेबल नहीं है, सपोज रेट हैज़ गोन टू 91 बाय दैट टाइम, सो हमारा ऑर्डर एग्जीक्यूट नहीं होगा. सो देयर इज अ सेटिंग इन ट्रेडट्रॉन दैट वी कैन मेक 2 अटेम्प्ट्स, एंड इफ इन 2 अटेम्प्ट्स ऑल्सो इट डज नॉट हैपन, we with few seconds or say 1 second तक ट्राई करता है, then we can go to market order. So it will execute at market order. So this has created lot of issues in Nifty, Bank Nifty and Fin Nifty. Of course, we cannot do market orders in these two indices. So these two has to be on the same principle that we have to send as limit order, and we have to suffer if the order does not get executed. I will show you the example of this execution issue in same strategy 118 on 25th only. You see here, this got CE and PE. At CE it sold at 167, PE it has sold at 129. Now the stop loss of CE and PE as per the calculation of the strategy logic is around 110 points, either CE or PE both. So now market went down and this should have exited at 129 plus 110. At 239 this PE should have exited if the order was market type. Okay, market means maybe 10-15 rupees more than this, let us say 15 rupees plus. So it should have exited at the most at 254, but because of this issue of sending the limit order, the LTP order, and then retrying etc., it got exited at 324. It is not the slippage, it is the execution issues. Plus 324 minus it should have exited at 239. So we suffered a loss of 85 rupees extra in case of this PE, which means 15 plus 85, 15 into 85, 1275 rupees extra. And that is good enough to make the strategy hit the stop loss, which we have around 2500 to 3000. So this is the reason that the strategy on expiry has been struggling because of this LTP order type. I have kept same in case of all the indices because it was required in mid cap Nifty and Sensex, so I kept it same, which was wrong actually. I should have changed it to market again for non mid cap Nifty, non Sensex days. The second thing which I could do is that I can make this as 200 ticks or say 200 ticks, suppose, for example. So 200 ticks means instead of 10 ticks, if I make it 200 ticks for retries, plus 200 into 0.05. So 10 rupees. So instead of making an effort of 98.99 rupees, the next retry the TT would have done is 100 plus minus 10 is equal to 90 rupees in this case. So there were more chance of order getting executed. So going forward, I will keep this as market order for the indices which allow the market order, and for even bank mid cap Nifty and Sensex also I will keep the higher ticks, because it is better that we take 5-10 rupees and get the order executed instead of like 85 rupees or 100 rupees we lost in this particular example. So this was one reason that straight away the strategy had an extra loss of around 1275, and which made the strategy trigger the universal exit. Another thing is that the premium behavior. If we see the trade number 7 and 8, serial number 7 and 8, since the market was going down and the strategy as per the logic has done the repair by selling a 182 rupees premium of CE because market was going down, and 137 which is a lesser premium for PE. So the trade was biased in the direction of market going down. Okay, of course the market reversed from there, and see what happens. The entry time of this repairs is 10:16:35 in both the cases of CE and PE. And within 2 minutes from 10:16 to 10:18 the market reversed and the PE suffered. PE went from 137 to 207 which is 70 rupees. Now you see PE loss in 2 minutes, 70 point loss. And CE, since we had sold a higher premium, in normal circumstances it should have got more profit than the loss in PE. So PE lower premium rose by 70 points in 2 minutes, and CE premium from 182 went up to 148. That is 32 plus 2, 34 points gain. Only 34 points gain. If you see in percentage terms, this was sold at 182 rupees and this was at 137 rupees. So now if you see here, the loss in PE is 70 divided by 137 percentage. 51% the premium increased in case of PE in 2 minutes, and the gain is 34 divided by 182 percentage, 18%. So this is what happens in volatility. So in the volatility, how we are suffering? Two ways. One is because of execution issues, which I mentioned above, that we lost 1275 rupees extra, and because of premium not behaving in the same way as they would have behaved in a normal sideways market. If in this case, if it was a normal market and PE has to go up, if PE has to go up 70 points on 137 rupees sell rate, most likely the CE, which was sold at 182, would have gained around 100 points. So we would have been 30 points in gain on this trade, but it did not happen. Since we already suffered 1200 rupees extra loss and then the premium behavior made us suffer, the strategy got a stop loss very quickly, and this has been happening quite a lot in last 1 month, especially on expiry days. So the thing on expiry strategies, what we can do for the time being till the market is not settled, we can start little late. I'll give you the example of this also. I ran this strategy again in my account. See, this was the first trade of this trust line account. I lost 2700. Same strategy and deployment which I gave the example of. but I restarted the strategy again at what time? 11 o'clock, and I easily got 2,225 rupees within half an hour time. Okay, and this I did after changing the limit order, LTP order to market order. So this makes a lot of difference. So it is not that the logic is bad, but there has been some issues of execution as well as imbalanced premium behavior, which we just discussed now. Okay, so these are the issues on execution part, and the thing which we are going to do to improve this. Now another thing which we face in especially when the market is volatile, that on the same strategy two different deployments will have two different P&L. This happens because of different entry price in the two deployments. Let us say one strategy in deployment 1, D1, and deployment 2. Let us say, I am taking just a roundabout example. Let us say the C or any PE has got sold at 100 rupees. And same time, because of the API not being very good, or see, once the order goes to market, nobody knows at what rate it will execute. So let us say one deployment got at 100 rupees, other got at 98 rupees sold. And now let us say the stop loss is 40% of the individual leg. So the stop loss for the first deployment will be 140, for the second deployment will be 137. And now suppose market goes up. Okay, the market goes up and the premium of this particular strike goes up to 138 and then reverses. So what will happen? Since the stop loss of this deployment 2 is 137, stop loss will get hit, and we will have 37 rupees into 15, suppose if it is Bank Nifty. This loss would have occurred in deployment 2. But since this reversed from 138 in case of deployment 1 and the stop loss was 140, so this stop loss is not hit. And suppose after half an hour it comes back, the rate comes back to say 100 का बेचा था हमने, मान लो 50 रुपये पे आ जाता है. So now in deployment 1 we sold at 100 and we exit at 50, so we gain 50 rupees, 50 into 15. So in deployment 1 we get 15 rupees, that is 750 rupees, and in deployment 2 we already have exited because of this stop loss. So now you can see the deployment 1 will have 750 rupees plus and deployment 2 will have 555 rupees plus. And this is because this 2 rupees difference, sometimes this difference can create like 99.2 also. Okay, the stop loss will be 139 and it many times happen that it will go to 139.5, 139.5 and this also 139.5, and one stop loss does not hit, other hits, and the market reverses from there. So this will happen when your trigger levels are at the point when fortunately or unfortunately reverts back from that particular point, makes a high of 139.5 and then reverse back. So this will happen. We cannot do much about this, but in a long run, if we are keeping the strategy deployed, sometimes you will fall in deployment 1 category, sometimes you will fall in deployment 2 category, but on a long run, both these deployments will get almost same with a reasonable difference only, not much difference. So what we have done, we have discussed these points, execution issues. Going forward, I told you that we will change the settings of LTP order and market orders and see how we can do, and maybe we start the expiry strategy a little bit late. Now, there's another point you will see in TradeTron. A lot of people will be saying and advertising that budget special strategies and all, deploy this, deploy that. There is nothing like that. We know how the behavior of budget day happens, and this time around it is not on account, it is not full budget. So there won't be any major decisions in the budget, major changes, because in the election year, the full budget is presented by the new government after the new government forms. So this budget is going to be a non-event. Okay, but at the same time, since this euphoria of budget day and premiums and all continues, next for 3 days, that is Monday, Tuesday, and Wednesday, because Thursday we have the budget. The premiums behavior will be like this only. The spikes will happen. Premiums are little less this time around, because if we see February 1st premium of shuttle premium of Nifty, it is around 350 rupees right now. I remember last time it was 400 rupees on budget day morning itself. So there is likelihood that this premium of 350 either will stay at 350 till budget day, or it may slightly go up also, because a lot of people will do this option buyings and all. Of course, they will lose mostly unless there is big one way move. So this premium in next 3-4 days will be volatile, and it is likely to stay there where it is today, or at the most we may gain little bit. So it is not advisable to be heavy deployed for next 3-4 days. Let us watch the market from sidelines. Keep your deployment, if it is 4x, keep it 1x or 2x maximum. If your deployable capital is 50 lakhs, maybe 20 lakhs, which I am doing in my case, in my client's account case. Market is not going to run away anywhere, because the kind of days we are having is that it does not take more than 5 minutes, 10 minutes for the strategy to get stop loss done. So there is no point. Market is not going to run away anywhere. Things will cool down on budget day, and after budget days we will be again on the normal market. But of course, since we have the elections coming up, all this volatility will continue. So we have to number one is the type of strategy we are deploying into. I am also working on that gain comes or not, but we should not lose. I am not saying that we should not lose. We will lose, but we should not lose big like we have done in January. So that should be the purpose till this volatility and continues. We cannot stop also, because ultimately premiums are premiums. They have to erode by expiry day. So we cannot time the market in terms of posing or not posing. The only thing what we can do is we can be little light. That will be the advice for next 3-4 days, as well as till April, May going forward, and we'll take the market as it comes since then. My effort is to make little changes in the strategies and timing so that we don't lose big. Another thing which has come in last 1 week is this 50-50 requirement. You know, some brokers like IFL and few more, if we have stocks worth 50 lakhs after haircuts and all, we were able to use entire 50 lakhs margin for intraday trading. And if we take overnight trading, we have to pay minor interest rate for a day or two. Till then we are carrying the position. But now suddenly IFL also has stopped this without prior intimation. So this has resulted a lot of panic, because 80-90% of the big clients, they trade on the pledge margin. They don't keep cash in the account. So now the requirement, though the IFL has told that they will come out with the solution by a day or two, but they haven't come yet. So I'm expecting that tomorrow, day after tomorrow, they should. They also have stopped this for right now, which is a big setback for the people who are having only stocks. If somebody is having Bs, that is treated as cash equivalent, and they don't face any problem as long as their cash equivalent is 50% of the total margin. So let us hope and let us be aware of this thing, because if this is the thing and suddenly the error starts coming without prior intimation from the broker that they are doing this, which is very unfortunate part, and then we may get some strategy into errors. And the way the market behaves nowadays, with spikes of up to 500 points in 5 minutes in Bank Nifty, a strategy in error can result in big loss. So we have to be aware of this, though there is no clarity yet. We hope we get at least intraday margin on full value, if not overnight margin. Overnight, I accept that 50-50 rule is fair enough, and clients will agree to that as well. So let us be aware of this and see if in next 1 or 2 days. I am saying about IFL clients. Same one has to check with their own brokers what they are up to on this. And because of these reasons, the shared code of all my strategies has been changed, because the account in which I was doing this does not meet the 50-50 margin requirement. So all the shared codes have been changed. I will share in the Telegram group today. So the historical data may not be as much as it was in the account which I had been running these shared code for long, but still we have to go by this. Anyway, all the old data is available in Google Sheet, so we can see it there. So I will share these details in the group also. So that is what I wanted to cover today. The only thing is that the summary of this video is that I will correct the execution issues which we have faced in expiry strategies, especially in Nifty, Bank Nifty and Fin Nifty. We cannot do much about mid-cap Nifty and Sensex, except avoiding trading in that. But we will run the strategy. If someone wants to avoid, they can avoid. But risk is known. Execution risk will be there because of this limit order issue. And this limit order issue, how it is affecting, I have shared the example. Number 2 is that we should be light, especially till budget. And then after budget, we will have another event coming after 2 months, that is election. I feel we cannot stop trading, or we cannot be overcautious, but the only thing is that we keep our deployments in control and take the things as they come. There is nothing to be panicked. We have seen this January month last year also behaving same way as it has done in last 15 days after 15th of January. So there is nothing to panic. And if there is any other specific concern or query in general or on algo-based strategies, do connect with me on Telegram or personal number. I'll be happy to discuss and see what can be done. That's it, friends. Thank you for your time on Sunday, and let us hope we have better days ahead, unlike January month. Thanks a lot. Thank you very much.